Friday of a bleak outlook and also reported a net loss of $95.5 million for the quarter ended March. Among other stocks that gained, however, transport operator SMRT rose 1.6% after the company said it had submitted a proposal on rail financing to the government.
Gaming operator Genting Singapore has posted a 77% rise in first quarter earnings. Net profit for the 3 months ended in March came in at $257.6 million. Now this was on the back of a jump in gambling revenue and better luck against high rollers at the Resorts World Sentosa Casino. Genting says the number of VIP high rollers has risen and it is optimistic it will continue to attract players. Mass market volume, on the other hand, has remained flat in the last 2 years. On its expansion plans in the region, Genting says it's seeking regulatory approval for a casino resort on South Korea's Jeju Island, worth some $2.5 billion. And for his outlook on equities, we're joined now by Jack Wang, a partner with Lexico Capital. Jack, welcome. Jack, Singapore's STI is now some 2% higher than where it started, the year. One key focus, of course, the US Fed Reserve. Do you see the Fed tapering process that's, now very much in place, finishing up by the end of the year or even earlier?
Well, I think pretty much, the signal is there. They'll be trying to finalize tapering soon. And of course, I think the market is already priced it in. I don't expect there will be too much of an impact on the market per se. Yeah, there might be some effects on the bond market though, because rising interest rate will have a dampening effect on prices of bond.
Jack, some analysts feel that the eventual ending of QE tapering too soon could lead to a massive withdrawal of funds from the region. Do you agree?
Well, I think probably for emerging market, not so. I would imagine you probably have a bigger impact on the dollar-denominated asset, as well as probably the US market. If you're looking emerging market, pretty much I think we'll be looking at the fundamentals, and what we are seeing, there actually has been pretty much lots of inflow of funds into ASEAN as well as China.
Right, let's look at REIT listings now, turning to those. Here in Singapore, we saw appetite for those last year. Is property still the investors' favourite in Singapore? Where do you see investors actually placing their money going forward?
Well, given the market volatility, still REITs offer a very attractive alternative, given the stability as well as sort of Suntec REIT, the kind of portfolio, they have excellent portfolio and good quality of tenant mix. I would expect it will continue to do well because of the uncertainty in the market. People chase for yield and they are very worried about the possible corrections, I think, given the current uncertainty in Ukraine. So all these are factors, I would still expect, REITs to do well. Property probably would be affected by the rising interest. So I would expect there's some dampening effect in the shorter term, but in the longer term, I would still think that property counters with overseas exposure, especially in China or in Malaysia, will continue to do well.
And looking at recent positive earnings news in Singapore, that has helped shore up investor confidence, certainly on the ground here. Which sectors do you think provide the best opportunities, perhaps, for investors?
Right now, what we're seeing probably is healthcare and companies that have a very strong exposure to consumer staples, where I think there is a lot of demand for their products. So we're still quite favored in terms of counters like Raffles, Medicals. They have a strong exposure to healthcare, and given the aging population as well as the concern for healthcare, we expect this sector to continue to do well.
All right, thanks very much for those comments. Jack Wang there, a partner with Lexico Capital. Moving on now, the